Hello, hello, hello. Let's get the microphone check out of the way here. Let me know if you guys can hear me okay across the various chats. We've got quite a few going on again today. We've got Twitch, we've got YouTube, we've got x.com under CryptoLandy there. And of course, we have the private stream running for those that cannot access those websites from their current locations. All right. Yeah, just let me know if you can hear me in the various chats and if the voice volume sounds okay. I know the music is a little loud. I will be turning that down. And then we'll get started in about a minute here. Okay, let's go ahead and get the music under control a little bit early today, and we're going to roll right into our live stream here. Thank you guys for letting me know that the audio is all right here. All right, we're going to get this rolling here. Hello and welcome to Landy's Crypto Corner for Market Madness Technical Analysis Monthly Close Edition. Man, that's a mouthful to say. Of course, today this is a live stream. If you're watching this after the fact, hi, we're in the past. Today is January 31st, 2024. And of course, we're going to look at Bitcoin. We'll also take a look at some other markets, Dixie, gold, traditional markets. And a few requests, if you guys have any, please only one. I know that some of you do like to get a few more in there, but just give me one today. I am going to be on a little bit of a tighter time frame today. We'll see. Actually, I'm going to be waiting on a text, so I'll confirm as we start to get into questions and requests here in a little bit. Yep, we got quite a few here today in the chat already. We've got Sam, Baba, Dr. Peppermint making a comeback here, although he says he is not feeling well. Sorry to hear that, buddy. We've got Bobby. I think I already said Baba and Spin already chatting. If you would like to chat, go ahead and just sub the channel. You can jump right into the chats there. Subbing, of course, is free as always, just like all of the information and tools that I provide here. For those of you in the Twitch chat, which I see there's quite a few these days now, if you do want to chat, I do not have a good working plugin for the Twitch chat right now. I'm trying to get that fixed. If you do want to jump in and ask questions or provide some comments, or just generally chat with others, come on over to the Landy's Crypto Corner YouTube page and sub there, jump in the chat, hang out with us. Same goes for you guys over there at X. There actually is no plugin for me to monitor chat over there, and I do see that there's a few over there as well. So we're going to get started here. Roka's here. Hello, Roka. We're going to get started here by looking at Bitcoin on the daily. You know, it's doing basically what we had already discussed, you know, well ahead of time, coming off the lows here. You know, once we saw that strike on the monthly down here at 38.5, you know, the next big area was going to be that lower first standard deviation above there, the weekly here at around 41.8. We saw that. Once that was reclaimed, next big weekly, and the upper first standard deviation at 43.2 to 3. We have seen a a nice run of this high here at 43,569. Nice. And, there is a higher high close and a higher high wick. So, the downtrend is broken, but that doesn't mean that it won't resume. So the way that would resume, of course, would be on any closes back below 39,525, of course, that also close below the wick lows of this move or deviation of the current range over here. So we had the deviation to the top side into the monthlies there. And then the, above at around that 45.5 to 47 on a close, 48, 240 run of that bear market wick high, and then a deviation down to the monthly weekly area at 39 to 38.5, and then right back into range. Now, if Bitcoin can close above the upper first standard deviation here and this weekly at 43.2 to 3, of course, it has to take out the local wick high now, which is just below the upper second standard deviation. So it's coming in at roughly 43.870, 43.9 area. Basically 44K. Above 44K, we are going to see Bitcoin right up against that upper second standard deviation. We can see that we have compression of the Bollinger Bands. Next big area to the upside to watch out for, of course, would be horizontal support and resistance. So we do have that 44,000 to 44,200 closing area up here. Next big area would be 45K. Above there, the monthly at 45.5 to the next monthly above it, where the current closing highs are coming in just around $47,000. And if we do start to see price break above there, well, we're looking at that monthly swing high at 48,240 to 49K at the wick high, probably a strike into $50,000. I would be aware of a short-term time frame pullback from there, and then just keep an eye on it. Above there, I would be looking to the mid to low $50,000 region. There's two weeklies up here at 50,800 to 51,800 or so. And then the next one would be the September of 2021 weekly swing high there. This was just prior to putting in the all-time high at $69,000. And that's coming in at around $53,000. We could even see a swing above that at around the $55,000 area. So basically mid to low $50,000 if we do see this wick high of the deviation of the range above get taken out on a close. Now, same goes for the downside. If we start seeing that 38.5 monthly fall apart, then we step it down to the weekly at 37.7, all the way down, big range, down to 36.2 to 3, possibly even to the next monthly down here at 35K and weekly just below it at 34.750. Of course, this chart is the support and resistance chart paired with Bollinger Bands, and I do want you to note how this played out in terms of support and resistance. We got expansion of the Bollinger Bands into the monthly at that $34,750, $35,000 monthly. Had quite a few days of going sideways and testing that area or testing that resistance. Flipped it, found support on it, came right up to the weeklies, 36.2 to 3, 37.7, even struck up to around that $38,000, swinging it. Nice move back down to retest that weekly monthly area as support right on the weekly, and then up and away to the next monthly after getting through the 37.7 weekly at 38.5 to 39K. See that 38.5 was tested quite a few times here on the daily, so few being 3, then move through to the weekly. And what do we see? Well, you already know what we see. We saw yet again a perfect strike right into the zone there at the monthly. It's beautiful. You should appreciate it. Price action is reacting in a very logical way, as if there is big professionals in the market that have been trading this market since around 16, 17 time frame. So yes, I know, that I know that there are professionals in this market. That's one of the reasons why longer term time frame support and resistance works so well. 2016 into 2017, there was enough price action developed on the chart for models to be put together for some of the bigger players in this space. So, it is reacting quite well. And of course, technical analysis can be performed even on assets and indices that are very young. But you usually want at least a couple months of price action on the chart to get a good gauge for support and resistance. And then, of course, trend is your first area to look at. So trend, support and resistance, volatility, create momentum. And that is what defines how price moves. In this case, we have our clean chart here. Pretty easy to decipher what's going on here. Bitcoin back in the range. We got the nice tight compression here. And this compression likely deepens a little bit more today. Now we might see the upper bands flatten out a bit if Bitcoin does close above the upper first standard deviation. That's coming in right at $43,000. If we do see Bitcoin close below 43, meaning the upper first, that still would make the basis an available target down here, no problem. That's coming in right at that weekly at 41.8. Below there, we look to the lower first. That is coming in the mid to upper $40,000 region at 40,680, almost 700 now. If we do start to see Bitcoin closing below the lower first or above the upper first, keep an eye on BBWP. All right, so BBWP is very close to the moving average. You can see that it is starting to point up, and the moving average, well, it's basically sideways, neutral, but it is starting to point up a little bit. So what we may end up seeing is Bitcoin, if it closes above the upper first, for instance, a little bit of volatility expansion on price here. That's where we need to really pay attention to that upper second around $44,000, because if we do start to see Bitcoin close above there, well, it's very likely that this deviation high gets ran, at least at minimum the range highs over here, 45 to 45.5 at the monthly, maybe even 46 at this wick high. But it would be very likely that that we see the range highs get tested over time. Now, again, as we do see compression coming in on the Bollinger Bands, upper second, lower second tend to be, quite rejective areas at minimum on the lower term time frames. So I would keep an eye on the price points that they're at. And obviously they're coming in key support and resistance areas. So that is something to bear in mind. We had quite a few closures that we talked about and that I talked about in yesterday's video staring at charts. Bitcoin back in the range or whatever I titled it. I don't remember. But, we had some pretty major time frame, higher time frame closes above the daily here. And that was the 2-day where Bitcoin had the nice expansion up on the Bollinger Bands here, and then beautiful mean reversion back to the lower second standard deviation, bounce to the basis. This is setting up for a range, especially if the 2-day candle closes like this above the basis. You can see that we have very clearly defined levels of the volatility levels, rather, of the Bollinger Bands or standard deviations. You can think of them as volatility levels, but they're standard deviations away from the basis band. In this case, when you see them kind of flattened out like this, it kind of sets up an initial range before we start to really see the contraction and expansion phase. So if we do see bands wide set like this, it kind of tells me that Bitcoin's going to be trapped for a little while. It could very easily test the lower second standard deviation. Doesn't really do much until it closes below there, and the wick low could very easily test the upper second standard deviation. Doesn't really do much unless we see it close above, and then of course take out the high. So because we see that it is very that the bands are very expanded, to be quite honest, in the context of what was this, a 49,000 to 38, so $10,000 range, $11,000 range. That creates some pretty good expansion of the Bollinger Bands, and we would want to see a little bit of compression. So this can happen a few different ways. We can see how it acted over here during the sideways and up move, where we had the big expansive move. off of 26.5. And then Bitcoin went sideways between, essentially it did drop the upper first here, but essentially it went sideways between the upper first and upper second. And because it went sideways for so long, we saw that compression. So, to the downside and upside, if Bitcoin were to just kind of hang out between the upper first, upper second, or lower first, lower second, and then just grind the areas to the upside and take out that resistance, or grind the areas to the downside here and take out that support, of course, then we could see a compression within the context of, the trend, and then a re-expansion during that trending phase. So we had, the compression in the context of an uptrend, and then a re-expansion. Now that's where you get, this is impulsive structure. So, and then this is a longer form consolidation, and we'd be looking for things to more than likely resolve to the upside, considering that I have shown you many times that we are seeing expansion on the monthly time frames here. Now, the 2-day, of course, we've got closing on Friday. And no, I'm sorry, Thursday. So we will discuss it on Friday. And that pivot for the 2-day is at 39,181. So I would keep an eye on that if Bitcoin does start testing the downside of the range here. But here's the more interesting chart here, and this is the 3-day. The 3-day is really kind of giving it away. The 3-day is in a compression phase, and we saw a beautiful move up where it just held on to that upper first standard deviation, and throughout the consolidation and re-expansion into the upper second standard deviation. So hitting it a few, impulsing through it to get the initial expansion, tapping on it again, holding that upper first, then impulsing up to the upper second standard deviation, hold the upper first, come back down to the basis, spike the upper first, upper second again, and then head down and mean revert to the lower second, kicking off a nice tight compression of the bands here, really cooling down BBWP as well. This is going to be the one that we have to watch, and here's the easy criteria. This is very simple. If Bitcoin were to break and close above the upper second standard deviation on the 3-day chart, one, it would be above the range, above the current consolidation range. We would then target the close open here at 46,120 to the wick high at $49,000. So if we see a close above the upper second standard deviation, those are the main targets. Once we see that 49,100 closed above on the 3-day chart, we have confirmation of expansion, range break, and a wider move, or a more volatile, expansive move to the upside. If we were to see this occur to the downside, it would need to close below the lower second standard deviation and then take out the wick low. Then we, consider support and resistance still. You don't just throw it away, but then we're looking for expansion to begin to the downside. So a wider move to the downside, likely targeting this range somewhere around, $34,000 to $35,000 on the bottom side, maybe even deeper down to this area here at like 33. Well, no, that's 34. So I was correct. $34,000 to $35,000 on the low side. And then on the high side, we'd be looking at minimum, that $38,000 high area to the $37,000 area. So that you have to consider how expansion interplays with the resistance to the top side. If we were to see Bitcoin closing back above the upper second, and you have to define the criteria for the expansion to the downside below the lower second, even if it gets a close down there. If it remains above the wick low, until it breaks it, we're not looking for further down. Same for the upside. Above the upper second, then we're looking to the close open here at 46,125 to the wick high at 49. It can close above the upper second, but until it breaks the wick high, we're not looking for a wider expansive move or for volatility to continue. It just gives us kind of a set range, and then to be aware if we see closes above or below the deviation high, deviation low area. Now, this paired with what we're seeing on Stoke is going to be the giveaway, right? Stoke is pivoted at 40,330, meaning that if Bitcoin were to drop 40,330, well, where would that be on the bands? Well, that would be right around the lower second standard deviation. So if we saw a cross down of Stoke and the lower second taken out on a close, then we're targeting the wick lows and lower as a possibility. If we do start to see, closes above the upper first, then the upper second is available. The upper first is basically the wick highs here, around $43,900 to $44,000. So above there on the next 3-day close, and things are looking good to go. This will close with Friday's candle. It's not going to close coming in, so we'll revisit this on Friday, but it is something that we got to keep a close eye on. The 4-day is another one. This is setting up for compression. It's starting to get that nice compressive look, but it's not quite fully baked in yet. It doesn't need to get there, especially considering the way the 3-day is. So, this could very easily just, came down to the lower first, spike up. If it reclaims the upper first at 44, 400 to 500, then we're looking to the upper second, which is the high, somewhere around $47,000. If it does start to close above there, wick highs available and higher. And we would already be seeing this on the timeframes below the 4-day. Now, the 4-day is pivoted at 45,680. This is going to be closing with the next 2-day candle, so keep an eye on it. This is going to, so basically tomorrow, it's going to close with tomorrow's candle. And it is very low volatility, just like the 3-day here, which is low volatility. If it ever populates, there we go. So we're looking at a bigger move coming soon, likely to coincide with Bitcoin coming into obviously this monthly February into March into April. We're kind of headed into the halving here. So the 5-day looks beautiful, came down to the basis and is bouncing from it. That's typical. If this is going to be bearish, it's going to remain below the upper first and or pin out at the upper second. So the upper first is right here at $44,000. The upper second is now at $47,350. So that would basically be like running the highs but failing. Now, when I say bearish, don't confuse bearish with like, oh, new lower lows. It would be bearish meaning that it's probably going to come back into range and then we come back to it, right? So if it did get to the upper second, fail there, or swing the high and fail there, then we're looking for it to, come back into range, and then we evaluate from there. Obviously, if it does drop the lows, then we have the lower first right here at 37,300, right across the this high side consolidation here on the 5-day chart. Below there is the lower second, which is coming in at where? Hey, we just talked about this, $34,000 to $35,000. I would be looking at that as worst case scenario on a downside move, at least initially until we came back to it. Wicks through are fine, but in terms of closes, I'd be looking down there if the lower first was lost. You can see that the 5-day is also compressing, very low BBWP, as well as Bitcoin mean reverted back to the basis. Looks beautiful. So move's not quite ready yet, but it looks like it's starting to gear up. So it's getting exciting again. We talked about this coming into the top side deviation that Bitcoin was getting a little hot to trot, probably needed to cool down. It was a strike right at the upper second standard deviation, near perfect here on the 5-day as well. So beautiful, beautiful stuff. And then, of course, we've got that weekly. And the weekly, is as it stands now, simple. This is a swing below the upper first, or a deviation below the upper first, especially if it closes back above it, which is at 43, 240, 250 area. If it does close above there on the weekly, then we'd be targeting somewhere around the upper second, which is the highs, at roughly 49 to, maybe even higher there to strike 50. This is something we're going to revisit on Friday, so we'll just come back to this anyway. But the pivot is 47,150 on the weekly, and 60 read is right about here. This is still in the bullish control zone. I wouldn't be fading this until we see multiple drives of bearish divergence on the weekly that are in trend. We can go look and evaluate where it is on the weekly. And even then, I wouldn't be looking for like anything too massive. We can see that on the weekly time frame here, there is no in-trend bearish divergence to be had just yet. We can see that, if it gets to the SMA here, it's at 46,350. That's a 12-period SMA. If it gets up to the bull critical zone, that's $53,000. It's a breakout into the mid to low $50,000 range. And I want to see multiple drives of bearish divergence before calling any kind of a weekly top or reversal. And as it currently stands, this is, a weekly swing high and a top, but I mean top for a longer period of time. I'd want to see at least 3 on the weekly, and we're not there yet. This is beautiful, is what this is. Can it come down more? Absolutely. The edge of the bullish control zone for RSI here is down here at on this particular indicator, a 62 read. Some indicators, or most indicators, it's going to be a 60. That's at 40,500. So again, that's the bottom side of the current range, just above the deviation lows there at 38.5 to 39.5 on the close, which is, in fact, the close open actually was still within range on the weekly. The close was at 41,554 on the close open on the weekly. So the close open on the weekly didn't even break the range lows. The wick coming in at 40,150, it struck it pretty much to a T, and then wicked through it, and then right back through the upper first here as it trades today. So beautiful, beautiful stuff. You're going to hear a lot about the 2-week and exhaustion on the 2-week, 3-week, 4-week. This was a compression to re-expansion, tap on the upper first standard deviation. Nothing too crazy. This is 39.5 at the upper first. Basis is now above the prior resistance, coming in at 33. And yeah, it looks beautiful. The lower first is now above this prior low over here, coming in at around 26.5. Now, from the 2-week chart, you need to understand that it's not the same as the weekly, where 26.5 is the higher low. In this case, the 4-week, we have a lower low deviation that did not pass the swing low. So this would be a higher low and a swing, not a higher low and a close, but this did kick off bullish divergence after breaking the highs. That was confirmed, or well, technically after setting this candle in October, it was confirmed bullish divergence. Got that quick compression to re-expansion, so looks beautiful. Like seeing that lower first above the prior lows over here on the 2-week chart, so looks good. We are still in an expansive phase, according to BBWP. If we were to look at this on Stoke, though, you will see that it is headed down on any closes below 48,500. That's fine. I'd be looking for this to bullish or reset, maybe even with divergence if Bitcoin hangs out in the range and or heads down a little bit further. Same for the 3-week. 47,300 is going to be the pivot there. Coming in just shy of the upper first standard deviation on the 3-week. And, that gives us the bias that as long as it's trading above the upper first, which is coming in at around, this is actually lower than that monthly at 38.5. It's coming in at 38.290, 38.3. I do suspect if Bitcoin was going to paint this candle back down towards it, it's probably around $38,000. And, the upper second is the highs again, somewhere around 45 to 45.5 there by the monthly. This is still an ongoing move. BBWP is still expanding, 41.81 over 29. You will see that, the Stochastic is pointed down at 47,300, but Bitcoin can very easily race to the top side there, continue its expansion, keeping that in the overbought zone for an extended period of time, or just kind of flip-flops around, maybe loses the edge of it. Doesn't really matter. Expansion is what the play is right now. Is there some longer term bearish divergence that could populate? Yeah, but this is a new trend. What you want to see is in trend bearish divergence. So, and in trend bearish divergence is not something that we see as a possibility here just yet. And the 4-week, big doji. You don't want to see the bottom close below here at 38.5. You need to see the top close below or closed above at 49.102. If you want to see continuation from the 4-week chart. Pretty ugly candle on the 4-week. But even at that, if we saw the lows get taken out, the upper first is one of the main targets there, right in between those weeklies at 36.2 to 3 and 37.7, with this upper first splitting the difference at around 36.5. Below there, we see the basis is above the low consolidation here by a good margin, coming in at 28,300. So basically, this is just reinforcing the bullish look on things. We also see that we have the compression to expansion. BBWP is following 31.4 over 26.34. Looks beautiful. Yes, is it in the overbought zone? Absolutely. 40,000, 750, 770 area, as that kind of oscillates around with price in between the 4-week closures. Well, looks good. When we have, especially on longer term timeframes, when we have Stoke in the overbought and oversold zones, it's where we typically see the biggest moves. So looks good. And then, of course, the monthly. And this is what we're going to be watching coming into this evening's close. And yeah, upper second standard deviation is the thing to watch. I've pointed it out many, many times. Bear market lower highs. I don't think I need to point it out again unless there's some new people here. But you know what? I should, just because I do think there is a few new people. Back in Bitcoin's history, we have seen or observed every single bear cycle. So, by the way, there was no bear market here to be had. No 3-candle high structures put in here. This you could consider a little bit too early to chart that, though. No 3-candle high structure here either, or 4-candle or 5-candle. So there was no, and this was also in the context of a move up. The first real bear market lower high came in 2014. Every time Bitcoin has had a bear market lower high put in, it has been retested after reversing trend on the monthly. So we had the double bottom in 14 into 15. Bitcoin gets compression of the Bollinger Bands, comes up, gets expansion of the Bollinger Bands right into that bear market lower high, swings it, comes back down and finds support on the upper first zone, and comes back and taps on supports. And then up and away after initiating that expansion. We saw this again in 2017 into the 2019 bear market lower high. But Landy, there was lower highs all over here. No, there was not. There was, you could make an argument for the April 18 to June 18 being a lower high, but it did not pass the, you could maybe even say March. This is more of a consolidation high, a real structural move, meaning closing higher and then moving lower than the open of the candles that were closing higher. So we had inside bars, and until we see the close that is an outside bar there, that is where we had the real bear market lower high. We also had the swing lower high up here of that move. We saw this then come down, set that major low, confirm this macro low as a macro low. We come up, swing the first bear market lower high on a close, and not bear market lower high on a swing, but bear market lower high on a close. It gets swung. Bitcoin comes down to the upper first for support, right up against all of this support area and structure, so horizontal support. Found support there, and then got expansion. So expansion has already occurred in this case, so it's a little bit more like the 2016 move, where we have seen so far the bear market lower high. So we had the lower high at 48,240. The close right here that came in April of 2022 was what confirmed that as a closing lower high. So the first bear market lower high. It has now been swung. Bitcoin is in expansion, still makes the upper first standard deviation available as a viable target all the way down to the supports, to be quite honest. And that's at 30,000 to 30,600 or so on the weekly. Here you can see it's at 30,477 on the monthly. So, structurally speaking, wicks could come all the way through down there and be just fine. I would not be concerned. And it's not until we saw closes back below about 26,000 or 25,000 in this case that, probably in for some major pain and a very, very long form accumulation process. As it stands right now, we're already seeing that expansion though, and every time Bitcoin has kicked off expansion, it has created a new all-time high. First, it's either done one of two things though. It's swung the bear market lower high, either just prior to expansion or just after expansion. So the just prior to was back here in 2020, and then the just after expansion was over here in 2016. So you see Bollinger Band expansion, swings the bear market lower high. This was just prior to getting that expansion, so it was still in compression. Swing that that high, even closing in the wicks of it, and then following through with the expansion phase of price there. And that is what I suspect is happening right now, is we're seeing something akin to what we saw in 2016. Now, if we do see Stoke turning down and crossing over, it's not a viable cross down, or what I would even consider playable, until we see a full cross down followed by a major high being put in. Then we can start looking lower. As it stands right now, it's a doji. If it closes higher, then the high from last month at 44,720 is in play, and up to this month's current high. So 39,385 is going to be the monthly pivot to watch. And we don't have any in-trend bearish divergence right now. So there's nothing here that is saying like, there's any problems that this time's going to be any different, right? Because that's the big thing, is this time is different. There's an ETF. Like every single time that Bitcoin has a monthly close, it's always, this time is different. This cycle is different. No, we have lengthening cycles, yes, but you're generally going to just see that as cycles lengthen, that we are going to observe the pieces and parts of price structure just take longer to play out. All right, that is the bulk of the Bitcoin analysis for today. Let's go ahead and take a look at Dixie real quick. Let's go to the daily. I know that today is FOMC day. Powell's probably going to speak if he's not already speaking. I don't really care. So we can get all the information we need right here on the chart. What he says is not going to matter. It's not going to change what's already happening in this market. So, we can see that the daily is pivoted at 103.42 down here. We do have an RSI rejection at the edge of the bullish control zone. It is back under the moving average here, but it's still in the bullish half of RSI. So, this is an accumulation at the highs. There's no clearly defined structure. It's just a range. Nice wick down to the basis there. That was one of our targets there at around 103. If it does close below the upper first, that is going to be, the target to get ran again is the bottom side of this current range. If it does drop it, then we're looking down to the lower first here at 102.5. Below there, we're looking down to around 102 even at this next range. So basically 50 cents at a time. Currently trading at 103.36. If it drops 103, then we're looking at 102.50, and below there 102, which lines up structurally with this consolidation over here. If it does drop the lower second, then we're looking down into this zone. If this specifically, if this 101.77 gets dropped, that would make the actual deviation down here of support a viable target area, into the low to mid 101 area. So I don't think whatever Powell's going to say, whatever they decide, even our charts already have all the information. So this information is baked in. Anything that he gets out there and talks about is reactionary for what you're going to see in the markets, as we're already seeing things play out on the charts. It's already baked in. It's already a possibility that if it loses the downside area where some of these areas of support would come in, at least initially. And on the other side of that, if we see the upper first reclaimed at 103.5, then we are looking to the top side of this range, somewhere around the upper second at 104 to this white line, or this high area around 104 to 104.25. Above there, 104.5 at this high. And then above there, we're looking right back to 105 again. So it's the same thing that we've been talking about for quite a while now. I wouldn't be looking for this to break down or break out immediately. It's going to be something just to kind of keep an eye on. If it does close back above 103.42, it would be a cross back up on Stoke in the strong half of the Bollinger Bands. So I would watch that today coming in to close. Let's look at gold. Gold. All that glitters is gold. All right. It hit our target at the upper second standard deviation, but as I said, it needs to get above there and close. So basically above this closing high at around 2055. What did it get to? 2055.98. It needs to close above there and specifically get above, basically 2060, 2062 area here to go start testing around 2070 to 2080. Above there, we're looking for around 21, swing this high somewhere in the 2090 to 2100, and then possibly up to that 2150 high up there. If it does begin to, lose the basis band again here at 2030, right back to the lower first there at support at 2015 to 2020. Below there, we're looking right back to around 2000 to 2005. If it drops this low, I'd be generally looking somewhere around 1980 to 1965 down here. So that has not changed at all. We have upside momentum of Stoke here on any closes above 2018. I suspect this is going to be in the 2020 to 2024 range after close today. In terms of its momentum pivot, we are seeing that that bullish divergence drive there, hidden bull div, played out, hit the top side, upper second standard deviation, so worked out perfectly. And yes, I did trade this because this is something that we had been watching for quite some time, since it's been, this would be a higher low, by the way, in the context of this downtrend, get that higher low. If it makes, it's going to have a little bit of a higher high base off this area, could start build a mini trend. So higher low, higher high. If it comes back down and or pushes on through, especially this high, then we look for another higher low, and then a resolution to the upside there of the Bollinger Bands, getting expansion to the top side if it were to do that. Of course, if it takes out that last higher low, then the range lows and lower are in play. Let's go ahead and look at traditional markets. Oh no, Powell's wrecking our our traditional market shitcoins. Yeah, excuse my language, but spike the upper second standard deviation. We were looking for this. It hit our target area right around 38.5. What did I say? 38.4 to 6 or whatever. And did it hit 38.6? Almost 38.588. It is also getting expansion right now. As long as it's above the upper first here at 38.122, it's looking good. If it does drop that area, keep an eye on, basically the basis band right around this consolidation. A little bit of a swing, higher low structure. And that's coming in at just under 38 there at 37.795. If that area is dropped, then I would be targeting right back to the lower first at 37.5 to 37.4. Below there, it would be this deviation low as compared to the range. Basically, the range lows here. It's coming in right at this candle close at 37,000. From here, if it does push up above 38.5, 38.6 area, the next big area to look for is going to be 38, 7 to 8. I would take it about 200 points at a time on Dow. Above there, 38 to 38.8 to 39. So that'd be the major areas to look for. We've got closes above 38.187. We'll keep momentum pointed to the upside here. This is in, the next high that it puts in, we'll throw a bear div. So, we will see things come back down and get some consolidation probably pretty soon. In fact, I just want to look like where's the bearish control zone as it stands right now. This would update, but I just want to see where it is right now for extremes. 36,650. It is worth checking this out. So 36,650 is kind of in no man's land in between this consolidation. Let's do the brush. So it's kind of this consolidation here, and this bigger consolidation. So, this area right here would be kind of an area that would be your fair value gap or whatever if you're using FVG. I don't need an indicator for that. If you would like to use an indicator for that, you can. To be more precise about the candles and zones on different time frames, but that would be a fair value gap area. That's more longer term stuff though. I need to see this fall apart, and right now it's not looking that way just yet, but it could start painting that way and throwing bear divs. So scale midline is probably more accurate to be looking at, and that's around 37.5 or so. Again, that's right around the lower first standard deviation of the Bollinger Bands. So that would be the more accurate area to be looking locally. And of course, it has to meet the criteria. It's still above the upper first. So it's got to drop that upper first at around 38,125 in order to even entertain those moves back to the basis and lower. Let's see, NASDAQ. NASDAQ is looking to confirm a high today and a bear div and a close below the upper first standard deviation. And, mean reversion back to support here is well in play and well underway, I think. That's coming in around this high at 16,900 to the basis here at around 17,000. So 16,900 to 17,000 is, kind of the next big target at the basis band. Below there is a high right here at around 16,850. And below there, the prior all-time high at 16,764. Below there, we would be targeting this wick low area by the lower first. And that is also the higher low. So if it does run that area, it would not be out of the question that it could break down, obviously, on any closes below there. But that's the lower first area right now at 584, so basically 16.6 below there. Then we're targeting this low over here by the lower second and the low 16,000 point area, 16,000 to 16,150. This is coming on expansion, nice compression to re-expansion, so mean reversion back to the basis lower first just fine. Same thing that we saw over here, compression to expansion, higher highs. In this case, it was a little bit of an equal high, lower high on a close and swing. But, you know, it comes all the way back to the lower first. Even got a lower high there, hold support, higher lows its way up. So no biggies there. I'd be expecting this to do much of the same for a little while. We'll see. 17,564 is the momentum pivot, so that will continue with its downside angle. At worst, if this structure up here starts to fall apart, 16's actually got some decent support on the bottom side of this. It would be an area of to look for support, I should say. And then down to around 16 even, 15.9. Looks really good though right now still. You want to see this cool down. So very nice. Multiple drives of bearish divergence, so daily reversal probably in play at minimum to a consolidation structure. Yeah, seems to be playing out right now. I suspect we're seeing the same for SPY. Did we hit our targets? 491. Yes, we did. Very sweet. Did we get any higher than that? 491.62, 491.42. So right into the zone. 490. Take it 5 points at a time. Above the 485, we're looking at 490 to 495 area. You can be a little bit tighter with that on lower term time frames, obviously. This is also looking to drop the upper first, which is going to make available that basis band by the prior all-time high around 480. Below there, we're looking to around 475 to 476. And below there, the lower first is above this higher low over here of the consolidation at 470. If that area was dropped, we're looking to the low side around the 469 area, nice, to the lower second around 465. This was a nice expansion that broke the all-time high. It can come back down, but this is expansion to mean reversion right now. So unless we start seeing like the lower first dropped, again, that's at 470. There's no concern with what's going on right now, at least not on my part. 490 or 489.28 is going to be the momentum pivot. Multiple drives of bearish divergence have now built on this structure here. So, same kind of thing, just to quickly look at like bearish control zones all the way down at 464, which is the daily lower second. So, I mean, this can literally come all the way down to the daily lower second, and that's just tapping on the bearish control zone. Now, could it come down lower from there into 460 and 450? Yeah, sure. But then it's going to start building bullish divergences all over the place. So I have no longer term concerns until we see a structure break on the daily that results in a consolidation that then comes up and tries to make highs and fails on longer term time frames. As it stands right now, it would take time for that to develop on the charts. So I'm not worried about any of this right now. And in fact, what's going to end up happening is we're going to see that the Fed will eventually start dropping rates. And that's when you might want to get concerned about things, because liquidity is going to flow. Liquidity is going to slosh around before coming back into markets. And a lot of that is because you lower rates, it's easier to get money. And in many cases, you have to put up some kind of an asset, or you have to put up some collateral in order to get loans. So a lot of stuff begins to shift around, and then we typically see crashes in those markets, or crashes of stock markets when you start to see that, at least in the beginning stages, and then it kind of curls back around and rockets again. Although the Fed has put the markets in a we're seeing a weird shift in the wider markets. So I would be aware of that maybe it is different. We're coming to the end of a cycle, a very long cycle in traditional markets. So we could see things react a little bit differently. But of course, I will be here to help guide you guys through and give you my take on things as they develop. All right, let's go ahead and look at a few extra things here. So I do want to look at the ticker buy sell ratio for Bitcoin right now. It's still about neutral. So let's go ahead and we'll zoom this in a little bit. As I've already explained, we don't need to look at this full chart in terms of the longer history because, as I've explained, the extremes in and above the 1.05, we're looking at like 1.008 to 1.12, 1.15 being the extreme end. This updates live, reacts live to price action. You might have to refresh this chart, but it can give you a bias. If it's starting to hit those extreme areas to the upside or the extreme areas, which are going to be typically anywhere around the 0.9 and lower, going to be extreme areas where you typically see the opposite, where it's kind of a counter signal. So if we see extreme bids where the taker buy sell ratio is way high, it's likely a counter signal to what's, for price, meaning that price is probably, at least in the shorter term time frame, is going to come down or get rejected. And then the same goes on the other side, for the taker buy sell ratio being really, really deep in the 0.88 and lower area. That would be considered extremes, and probably price will get picked up in those lower term timeframes. Again, I'm talking lower term timeframes. So that is something to pay attention to. As it stands right now, it's kind of just hanging out in the neutral zone. Had that nice little spike up off the lows before breaking out to around the 43 to deeper $43,000 area. And then kind of consolidated, saw a few little spikes down, and then back up on the average. So looks pretty good still. Let's go ahead and check open interest real quick here. I would assume it's building back up to levels that it had previously broken down from. Oh, no, well, we've got this nice little pullback. We did have 43, 8 area here on the hourly again. Nice swing. Looks like it's a high painting right now. So what I will say is that was higher high on price action on a close, lower high on aggregate open interest, which is a bit of a divergence. So you're seeing that drawdown. That does mean that if Bitcoin can maintain above around 42.5 and open interest legs down and makes lower lows, then you have a divergence, bullish divergence in open interest on the other side of that. So cool beans. Yeah, that's going to do it for Bitcoin today, guys. Let me go ahead and turn the tunes back on. We're going to take a look at the chats and see what you guys are talking about, see if there's any requests. Having a hard time with the S's today. All right, so let's do this. All right, let's look at the chats over here. So we got quite a few others that are in here chatting. For those of you that are just watching along, if you would like to chat, go ahead and subscribe and come on down in the chat, hang out with us. Yes, I do still have subscriber mode on for chat because bots come in and were coming in when it was not in subscriber mode, and then they were flooding the chat with garbage. But yeah, if you subscribe, you can come right down and chat to prove you're not a bot. All right, let's see. I got a lot of there's a wall of text in chat, so give me just a moment to read through some of this while I drink some of my coffee. Bobby says LFG, send it. Doesn't I don't care which side, upside, downside, sideways, in effing circles. That's funny. Spin says hello bots, hello Landy, hello Spin. I think I said hello to everybody that's actually chatting here. Oh no, we had Cheryl come in and Roka. I think I said hi to Roka. Hi Cheryl, how are you? All right, let's look here because I think Spin was talking about. So China is having its first Bitcoin ETF released. Hopefully there'll be, yeah. I don't know too much about it, but it's probably something, something to be aware of, something to watch. Roka says he doubts anything interesting is happening before the halving. I think that everything about price is interesting, so I would disagree there. But I understand exactly what you mean. Everyone's getting hyped for the halving. It would be funny everybody gets hyped for the halving and like prices go sideways for an extended period of time. That would be kind of fitting. Just people getting super bullish and people getting super bearish. People getting super bullish because look, it's in a long form consolidation. People getting super bearish because there was the halving and price didn't mark up, and like, oh man, the discourse around that would be absolutely hilarious. Bobby's saying something about ETFs in the US market's probably going to be a little bit more influential on price. Look, the ETFs, even that are launched and whatever China launches, it's going to pale in comparison. It's only a fraction of the volume right now. Will it get there over time and maybe become more dominant than what's going on chain for, OTC, miners, and Mickey Mouse shops, or exchanges, as I call them. The unregulated exchanges. Probably not. ETFs probably are going to be playing catch up in that regard. By the way, the ETFs are doing fantastic here in the US. Like, that was for as doomer as a lot of the Bitcoin maxis are about it right now. The launch was fantastic. And I'm going to, all right, Landy rant time. We got to do this. And here's why. We're going to throw the 30-second degen chart on because everybody is secretly a degen inside. You're all degenerates, whether you know it or not. Or we're all degenerates because I am part of that crew as well. Look, there's a lot of Bitcoin maxis and a lot of like self-custody guys that are hand-wringing over the ETFs and are like totally against it and just want to take every opportunity to shit on it. And they're failing to understand that this is how Bitcoin infiltrates the regular financial system. And once it infiltrates, it's only going to spread from here, which means that we then have transparency, right? The further the Bitcoin infiltrates the financial system, the more ability is available for it to subvert corruption. This is a necessary step, getting into ETFs and then those ETFs being a part of 401ks and IRAs and individual investors taking and holding those ETFs, and then, options traders being able to trade against it and leverage against it. The underlying asset is not like gold, where you don't know how much gold is being held by the banks or those or where the custody of that gold. If on gold ETFs, there's no way for anyone to verify the holdings that are supposed to be backing it. And it's ridiculous to even argue that Bitcoin is a bad thing for traditional markets. It is the antidote for the corruption that is propagated and perpetrated rather by those in, with the money printers of the world, right? And it's going to slowly infect the entire system. They want it to happen tomorrow. They want to run a side-by-side system that's going to take over. That's just not how it's going to work. I don't understand. Oh, it's sovereign and you need to, okay. Then you're going to run a side-by-side system and create a completely separate society. How are you going to get everybody else on board? There's just no way. And it's such small brain thinking. Not smooth brain, small brain. Because they had big brains and then they shrank over time as they only had one thought, Bitcoin only. You have to be able to subvert and infiltrate the system. That is what we are seeing. And the Bitcoin maxis that are against it are completely missing the point of Bitcoin. They don't truly understand what Bitcoin was meant to do. And that is unfortunate for them because, if they're going to hold and they want to hold self-custody, that is what they should be doing. And I suggest that everyone holds their Bitcoin self-custody. I'm not in favor of getting the ETF, but if you want to hold Bitcoin, I'm not in favor of getting the ETF, but I am in favor of getting the ETF on the other hand, because you could buy the ETF. Let's say that, you already hold Bitcoin. So I already hold, we'll say a substantial amount of Bitcoin, right? So I want to go and I don't want to put my Bitcoin up for collateral. I don't want to reveal my wallet addresses. I don't want to do any of these things that might put my Bitcoin at risk, right? With, whether it's, doing multi-sig custody or any of these other things. I can go and use fiat money to buy an ETF, and then I can put that up as collateral. It's far easier to get loans against and to loan out that ETF. Well, they handle all of the background stuff, and it's just, here you go. I can loan it out. I can take loans against it. And it becomes a tool. So there is many different ways that this can be leveraged on the corporate side of things, on the municipal side of things. I've talked about all of this stuff before, but even on the personal side of things for people. And it's a beautiful, beautiful thing because the underlying asset can be tracked. And for those that are publishing their wallet addresses, they're all going to get found out no matter what, but you've got, Bitwise, published their wallet address so that you can go and verify that it is completely backed. And I suspect that the other players in this game are going to do the same thing. And this also brings with it a whole new set of people that are going to be looking at Bitcoin and trying to figure out how they can integrate this into their development, right? And that's at every level. You're going to have new developers looking at it. You're going to have new ways of looking at how we can integrate Bitcoin into every other part of our lives in society. So they're missing the forest through the trees. And it's unfortunate. I know that some of you fall on that line of like, hey, the ETFs I'm not a fan of. And that's okay. You don't have to be a fan of them. You don't have to be a fan of BlackRock or any of these big corporations, but guess what? They've been infected. Now they've got the infection and they're going to spread it. You want Bitcoin everywhere? This is what you really want. If you know how to hold things on your own and self-custody, do it. I suggest that that's all you do with your Bitcoin. is self-custody. And if you don't know how to do that, learn how to do it. There's plenty of resources out there. There's plenty of free resources. You can make your own cold storage wallets. You can run your own nodes. There's a million different things you can do. And I suggest, by the way, if you aren't running your own node, you can run your node on an old laptop, you know, and there's you know, many different tools to help you create just a USB stick, you know, for cold storage. I would suggest other things. Like I've got quite a few. I mean, maybe want to avoid Treasure and Ledger these days. I don't really know. You have to do your own research on that. I know Ledger is not. They've had some weird issues with their code where it's, you know, not exactly private or secure. Treasure has had some issues, but it was on the customer support side of things. It was some phishing email stuff. So don't click links in your email from them. I like the Jade Blockstream stuff. Cold Card is another good one. You know, but they're all going to have trade-offs. So go do your own research on it and understand how to use cold storage. Understand that, you know, there's a few different ways that you can air gap. You know, and I would always suggest, as we watch Bitcoin spike 43.5, Powell must be talking, right? He has big drawdown and then big higher low. You know, you get an accumulation and then downtrend break, higher low. Anyway, I would advise you all, if you don't know, and maybe we can do a video about this. Some of you are going to have to tell me if this is worth it. Does anybody want to see a video about how to set up your own node? I mean, just the setup process. I could always just show you in a virtual machine. And every time Mr. Powell talks, Bitcoin goes up. Well, for a while it wasn't like that, but yeah, I mean, lately it's been that way. Like I said, the move's already baked in, right? When he's talking, you're just seeing volatility within those baked in moves. I think Bobby's saying yes, why not? I think he's referring to node setup. Just show you in a virtual machine. Do like a dedicated video on how to set up a node. I would tell you there's very economical, affordable, low cost dedicated devices that you can get to run nodes. There's a lot of them. I like the little BitAxe miner. It's pretty cool. There's a few others out there like that, and they're super cheap. But yeah, I would suggest that you get a dedicated piece of equipment that where its sole task is to run a node, and maybe even get a little bit in there, see if you can try and get in a pool and maybe get a block reward. But yeah, let's go ahead and look at this again. So something about the dark side of the moon. Cheryl says what? I'm sure Cheryl wants to look at Sol, right? Oh, Bobby already got there. Okay. So, wait. Doge BTC. Oh, you're banking on the Elon thing. All right, so yeah, Elon's compensation package was rejected because of like somebody who holds a very low amount of shares went and took them to court in Delaware, and the judge basically overrode the majority of shareholders and the board and nixed his compensation package that was already a done deal from 5 years ago. What a shit show. They're just going after him for, you know, the same way that they go after other political figures and or business figures that disagree or disagreeable or not favorable to the way that our country is being run right now. It's kind of ridiculous. You don't have to even like Elon Musk to see that ruling was awful for and sets precedent for business in general. So, you know, you can love him or hate him. That ruling is ridiculous because it overrode the majority of shareholders voted in favor of that package, as well as the board of directors. So it was not like it was just the board of directors and Elon Musk saying, I'm paying myself this. No, the proposal was drafted, the board of directors put it out there, and shareholders voted in favor. And then it was a minority shareholder that brought it to court. It's ridiculous. Anyway, TRB, I'm seeing Sol, Doge, BTC. ETFs, Roka says ETFs are the start of the end game for Bitcoin. I think you mean not the end game for Bitcoin, but the end game for the corrupt fiat currencies of the world. You'll have to correct me if I'm wrong. It's definitely not bad for Bitcoin. So I would say it's bad for the other side of that equation. Over time, it will take a while. Let's see. Bought some more because of the Elon news. I need some way financing. No, he won't. They'll just the board will draft another compensation package. They'll approve it. And he'll get what he needs out of it. And he's probably going to reincorporate in Texas anyway, because that's where his headquarters are for Tesla and SpaceX. So, yeah, like, I wouldn't be putting too much into like, oh my God. It's just like they're just going to work out another compensation package, and then they'll bring it to the shareholders. Shareholders will either, you know, negotiate and then put it forward for vote along with the board. Let's go ahead and look at a few non-Bitcoin items here. We'll take a quick look at Sol to soothe our souls. Hey, look, it's right in the areas that we talked about it the last time. You know, on the daily here, it hasn't done too much. I mean, it did come up to the 107 area after it swept the lows down here, hitting our support below the lower second and into the lower third area at around 78.75. Recovered the 93 to 94 area around the basis, and then right back to the top side, spiking into the overhead resistance there. You know, this is a downtrend break. Very clear right here. It is not a downtrend break on a close, though. It needs to close above this high here at 102.04 to be a downtrend break on a close, but it is a higher high swing. So one of the things that I do want to kind of tell you about here that you should be aware of, when you see a downtrend break like this, but it fails to actually break the downtrend on a close, at least I think it didn't break it on a close. The close is 101.69. Nice. And this close over here is 102.04. Because it didn't break it on a close, beware of possible moves back down to the lows that break the lows at around that 78.75, and specifically dive through this close open area down here around $75. That would be bad. That would be a bit of a distribution structure But as it stands right now, if it can close back above the upper second, we're looking at 104.30 for that. You know, I'd be looking right back into this zone here at around that 106 to 110 region by the upper third. Above there, we're looking at around 115 to this last wick high over here at around 117, 120 area. Yep, that would be the close up here. And then if it can take out 126.60, then we're looking probably for a pretty big leg up, you know, 130, 135, and then eventually 140 to 145 up here. If it does drop like $75, then that's a problem. But there is some supports right here at around 65, and you'd want to see it remaining above around $60, or else it's in danger of heading all the way back down to the $50 range. Looks good. Looks fine so far, until we see a move that that's not so great. So I would be on the lookout. We're seeing a swing high being painted. If it paints a closing high, be aware of this hidden bearish divergence. But I would still be looking for some sort of a higher low equal low structure on the lows, or paying attention and seeing if the stars align if it were to get back at the lows. Otherwise, in between now and then, keep an eye on around 90 to 95 bucks. See how it reacts around that basis band. So it's actually, no, I would say lower first to the basis. So I would give it a range of about 88 bucks to around 93.69. Nice. Landy, look into the future. Where's BTC in 10 years? Yeah, I wish. Much higher prices than it is now, I can tell you that. Let's see. What else did we say? Doge BTC. Oh, I said Boge. We want Doge. I'm assuming you want Binance, because it's probably going to have the more accurate chart here. You know, this is a consolidation look right now, and this is a consolidation on lower lows here. This looks like garbage, but it is in an area of support. As long as it holds this low right here at around, oh my god, let's not do Doge BTC. Can't read those numbers. Look, above this last higher low, this last lower low in the weekly, it has the potential to bottom out. I don't know what the hell that number is. 163, right? I'm sorry, the low is 164. Ooh, we're just gonna call it 164. It's 164 satoshis or some shit. Yeah, I would say that it has the potential to try and bottom out, but it's got to get above 200 to 201 up here. Take out the high at 215 to 220 to even start having a chance. Right now, this looks like absolute utter trash on its BTC chart. Yeah, 1,100. I'm sorry, 1,992 satoshis or something. I think that's what that is. It's a little difficult, sir. I'm not ready for the next era. I can't count this. I can't do the Satoshi conversion. Oh no. Fail. This chart looks like trash on the weekly. I wouldn't touch it. Maybe Doge USD looks a little bit better. It does. Not. No, it looks fine. it's range bound. This is coiling up in USD terms. If it can hold the basis around 7 cents, 7.75 cents, ooh, it's got the potential to take out this little bit of a lower high swing here at the upper first at around just under 9 cents at 8.9 cents, 8.92 cents, almost 9 cents. If it can take out 9 cents, it's going to be looking at 10 cents to 11 cents pretty quickly again. And that would be setting a low, probably double bottom on the swing and then up. But if it does drop around 7.4 cents, you know, you got to be aware of these lows getting ran again. Somewhere around 6.5 to 5.5 down here by the lower second. Daily's pointed up above 7.9 cents, so trading at about 8 cents. It's consolidating. This is pretty easy. It's fairly low volatility on the bands here, so above the upper second at 8.5 cents. Looking to test that high around 9 cents. So that's the low side of this consolidation over here. And then below the lower second, it's dropping its lows at 7.5 cents. So that's where we're looking, you know, down a bit further to 7 cents, 6.5, so on and so forth. Pretty easy chart. Nothing too crazy there. Let's go ahead and look at TRB. It hit our zone that we looked at the last time that we spoke about it. As long as it holds the lower first, it's, you know, it could start to try to break out of this consolidation that it's in. That's at 108.66. If it can start getting above its local wick highs in the basis around 123.25, I'd be marking that up to around 130 to 132 by the upper first. Upper second area at 144.71 to maybe even the high over here at 157 to what's this high coming in at? The high's coming in at 166, 170 area. If it does drop this this low over here and lower first, lower second at the lows, fair game at like $100. Below there, probably looking at expansion down to around 90 to 92, and below there we're looking at 80. Basically, like it's 81.35 to 73, but I'd be looking like 70 to 80 bucks down here. The momentum pivot probably above it. It is 108.33 is the momentum pivot on the daily. I would be aware of. Yeah, no bullish diversions just yet off this. Yeah, close below this guy over here. RSI was above this guy over here. So yeah, it's just consolidating right now, setting up for a bigger move, either to the upside or downside. You know, generally speaking, probably gonna try its local highs at the very least. That's 150 area, 160 area. But you got to see it trading and staying above $100. Weekly could be getting a bullish reset here. 352 is the momentum pivot, but that's going to quickly change if this starts to test back up to like 140, 150. You'll see that pivot really it'll drop to the low area and then reverse. So the upper first is at 140. If it can recover that, good to go. Basis, what do you know? It's at $100. So that's the area it needs to hold. Below there, it's in danger of running these lows around 70 to 80 bucks, and lower first in the weeklies all the way down there at 60 bucks. Nice chart though. That's kind of a big top area. I mean, this wick came up all the way to 618. Even if this starts to trade back above like 180 to 200 bucks, this might be a very significant top on TRB. Just so you know. I saw another one that came up in here. Or maybe that was it. Yeah, Satoshis. They use them in the Matrix. Of course. Well, Satoshis are what are fractions of a Bitcoin, are called Satoshis. Tesla daily is very oversold, but weekly and monthly looking critical. Do you want me to look at Tesla, Don? Let me know. Or if you were just commenting on it in general. You're welcome, Cheryl. I do think this question isn't coming from the public chats. I do think that Teller is got a significant high put in for a longer period of time. You know, can it get broken at like all the way up there at 618? Sure, but it's going to take a while. Okay, Don. I'll look at Tesla for you. The weekly is a downtrend. As long as it's above this close here at 164, and specifically the wick low at 152.37, it's fine. Probably running out of downside momentum. We'll take a look here. No, it's got more to go. 242 is the momentum pivot, so this is probably going to stay down for a little while. Daily might bounce around. I'm looking to set up a bounce on close today above 182, at least in terms of momentum, but we need to see that structurally. We're not seeing that structurally. And in fact, even if it does set up a bounce from here, you can see that this low is the current swing high at around 195.72, 196 area by the lower first. Lower first, to be fair, is slightly above there. It's 195. Yeah, 195. So if it can take out 195, I would, I'd mark up from this low to the next set of lows here, which is somewhere around the mid to upper 210 region. So about, anywhere from 200 to 210. That would just be a bearish retest of this move down. Above there, we'd be looking to about 215 by the basis, which is this consolidation before the gap down. And still bearish even all the way up to the upper first at 233, but obviously there's trades to be had there, right? It's got to get above and close above 195 at minimum to initiate a wider bounce as it stands right now. If it loses the low over here at 180 and starts to close below the lower second, it's continuation to the downside. 176 is that lower second. And then we start looking over here and into these lows around the 165 to 160 region. Need to see that 150 to 152 hold up, or else it's probably going to fall significantly further. No interest in this really doing anything significant to the upside in terms of wider, longer term structure below 260, 270, which is the high up here. So it can bounce significantly, and there's obviously trades to be had there, but below 260, 270, nothing of interest longer term. And it still would need to break out above like 300. So, but the daily is setting up for a bounce. I want to see more bullish divergence building, whether it's from the local trend down and or bouncing bullish divergence trend building from some of the prior lows. It will, not as it stands right now, but it will have the potential off of this low over here and then locally as well. So not too much more to say about it. It's significantly oversold, but until it regains 195, 200, Not really looking for too much of a wider bounce. And even then, I think it's limited to like 215, 220. If it starts to just leg right up, then I'd be looking for bearish divergence and then bullish divergence on the other side of whatever move happens from there. Bull flag? No. Too long to be a bull flag. Yeah, too long to be a bull flag. This is a holy shit, hold on to your shorts if 150 is broken, because that could turn into a, you know, we've got this weekly over here in the $100 range, because you're probably looking down in the $100 range again, you know, low 100s, and that could be very, very dangerous for the long term, because you could easily see that distributing all the way down to 65 and possibly even $20 range. That would be massive. That's not the first thing I'd be looking for, though. Tesla is a healthy company. You know, there's going to be hand wringing about a lot of things regarding it, but Tesla is in the way that they're structured, they're a healthy company, and they can very quickly pivot to cash flow positive even in negative conditions. So I'm not like overly concerned about that. It's more about like somebody trying to kill them, meaning kill their stock, which can be accomplished, but there's a lot of market demand for Tesla as a technology company, even more so than a car company at this point. But yeah, this would be the area that you'd want to see it bottom in, is 180. There's the lows over here. Otherwise, it's got maybe one or two shots. You know, this low came in around this consolidation high, so it doesn't look great on the weekly, that's for sure. Monthly is probably even less enticing. Yeah, monthly lower for standard deviation strike at 189 to 180. Lower seconds at 140. So yeah, it's that 180's got to hold for the Tesla bulls. Otherwise, it's gonna be a big ouchie. 250 is the monthly pivot. It's a quarterly pivot. Quarterly pivot's 225. Where's the 2 month? 2 months not too bad at 176, because we have that bifurcation there. It's not too bad. 4 weeks already going to be turned down, I suspect. Yep. 260, 236 on the 3 week. 2 week is 230. Weekly is 242. We're seeing a lot of bifurcation because of the gap down and this downtrend structure. But you're going to see a lot of bullish divergence building on the other side of this. So now from the weekly perspective, I would just keep an eye on the January 23 and this current low that could be set. Get some bullish divergence from that. No, I'm a liar, because that is the 101 low, and the critical zones all the way down there, that would be breaking the low. It's probably actually around equal lows if I had to measure it, so let's actually do that. It's got to create some in-trend bullish divergence, and it's not in the position to do that. Maybe from this low, maybe there is a possibility from the 152 low. There is the possibility for bullish divergence if it can put in a low on the weekly. Yeah, I'll just watch it. Low 195, it's continuation down though, at least from the daily and possibly more. Let me go ahead and get back to the Bitcoin chart here and take a look at the chats. Putting on that deviation high, right back, taking out this this high here. So I'll lower first at 42.5 to the lows at the lower second here at around 42 to 42.3 is fair game right now. If it closes like this on the hourly, but at minimum, if it closes below the basis at around, we'll call it 43K. Then mid $42,000 region is available as a potential target. Let's look at the 15 minutes to see. 43.84 is the pivot here. Expansion to a little bit of contraction, and then now expansion to the downside here. So yeah, that's fair game. 42.5, 42.6 region is fair game. What did it just hit? 42.7. Yeah. All the way down to 42K is fair game right now. Second degen chart. Oh no, it's a bear flag. This is a legit bear flag if it plays out that way, as long as it's trading below its current highs on a close at 42,950, 43K. This was likely going to remain a bear flag. It's probably got an initial target of let's see. Nope. Nope. That's why. Couldn't snap on to yep. 618, 42.5. So, and look at where the one spot is. 42,300, which is the lower second on the hourly. Fibs, they work. Yep. So there's your confluence for the bear flag on the 30-second chart. That's also a bit of a bear flag on time frames higher than the 30-second chart as well. So it is fair game, yeah. 4 hour, it's just an expanding consolidation. Lower first is coming in right around that area at 42,350. This would be a lower high on a close and a swing, especially if it closes below 42.5. Then we're probably looking at 41.8 down here by the lower second again at the weekly. So it's all relative to the weekly zone that it's currently in. And with the compression happening here on the bands, this is to be expected. Bobby, fibs work? I'm shocked. Yep, basically. I mean, the bounce back would be if this breaks above 43 again, then it's, probably back into the 42,950, and 43 gets tested over here to around 43.1, possibly 43,250 to 43.5 again, the highs. Oh, right now this looks pretty flaggy. It's even a breakdown from the flag and then a retest. So if you were gonna paint a legit flag, but you can't play them. They suck to play. The hit rate's really low on flags, unless you're looking at wider structure. There we go. 43. Tag this low up here. Come on. There we go. Now the next low. Well, it's got to get past this low right here. And then the next little low is at 43,078 to 43.1. this guy over here, and then we look up here where this high came in along these lows at 43,250. And we can just watch it play out. Compression on the 30-second chart to expansion, and we hit 43 and 43.72. So we have now basically in and around these areas here. Yes, you've turned me into a degen. It's you. It was your fault. Making me look at the damn 30-second chart all the time. So on the way back up, we got this area recovered. So the next area to look at is right where it's tagging, which is this low. When you're on a 30-second chart, you do kind of look right there. You know, I can go back further, but it's not worth it. It's in no man's land. So it's the local structures. So we tagged this low, and then we tagged this low of the move. And you'll see that horizontal support and resistance is your friend. So expansion into resistance, getting a pullback here on the 30-second chart. So on the other side of that, if you want to see if the breakout's real, man, then you know, you want to see it hold the basis. If it drops it, there's, you know, support structures down here at the lows, but we prefer to see it holding on to the basis and the area that it just broke out from. If it nukes through it, then this is a deviation, and it's probably going to continue down to these lows. Hey, look, short-term bounce off that basis. Yeah, there's some true degens in the chats here. Yeah, like, we're talking actual degenerate traders. I'm absolutely looking at Bobby and Roka. Yep. Really any Sam, any quant website. I like Crypto Quant. I think they have a dashboard now for exactly what you're asking me about. Oh gosh, I hit the wrong button. So yeah. So here's like ETF overviews. It's called Crypto Quant. It's free for basic accounts. Bobby says, me, a degen? How dare you? There's a link for you, Sam. So this shows you basically all of the ETF information in one dashboard. So if you want to see ETFs and the holdings and that kind of stuff, you can come here, as they mapped out the majority of the wallets, in combination with the insights provided by the Bloomberg terminal. There is also Bitcoin market cycle and ETF flows over here, along with realized cap, Coinbase Prime inflows, ETF overview on this screen as well. Who's holding what, how much, grayscale reserves, their holdings, their on-chain reserves, all kinds of stuff. There's all kinds of cool stuff. here, and you can make your own dashboards based on what you want to see. There's another couple of interesting ones here that I like. What is this? Oh yeah, this is the chart that's got like every kind of quant metric you could possibly think of on it. I'll post this one in the chat for you. Like any NTV, Golden Cross, you've got net realize, you've got your NUPL, supply and profit, short-term holders, SOPR, got MVRV ratios, investor caps, you've got MVRV, STHs, you've got LTH and STH, long-term holder, short-term holder profitability, historical Bitcoin trends, and proof of reserves. Again, bull bear market cycle indicator, historical Bitcoin holdings. Oh yeah, this is a good one. This kind of has everything that you can think of in one dashboard. Spin asks if I can look at oil. Sure. Let's go to daily. Let's go back here and go to commodities and oil. Swing highs in, just like we were talking about the other day on Monday. So swing high is in, looks like closing high is in as well, but it needs to, only if it breaks down below the upper first and then loses 75.35, we'll look down to around 74 by the basis, which is exactly at 74 bucks. If it gets below there, start targeting somewhere around the low side consolidation by the lower first at 70 to 72. Below there, it's the swing lows at the lower second around 69. Nice, 75. If that area is dropped, we're looking right back to the lows at 67.62 or 67.65. 67.74. I'm reading all the wrong numbers by the lower third. If that starts to get closed below, then it's going to drop significantly to test somewhere in the $65 to $60 range down here. Now, this is it's trying to dig itself out, right? Downtrend break to a consolidation, right? To an uptrend. So as long as it's above its last, higher low at around 70 bucks, it's probably going to continue testing a little bit higher. If it does get above around 79.5 to 80 bucks, I'm looking anywhere from 82 to around 84 to 85 at these highs over here. If it does reclaim these lows specifically, yeah, if it starts to reclaim like 84 to 85 bucks, then it's probably going to leg up to around 90. I will say that it's not looking great right now in terms of momentum and putting in a high locally, but all the criteria that I just said, as long as it's above 70 bucks, it's looking fine. It's got nice bullish resets of momentum. 78.21 is going to be the momentum pivot. No real in-trend bearish divergence right now, so that is what I would want to see. There's longer term hidden bearish divergence, but nothing crazy. It's more about that weekly, man. That weekly is coming off the $70 region on the pivot, so $70.45. This is this could become a distribution area, but it's got strong support around 60 to 65 bucks. So, in relative to, this was a downtrend break on the weekly, a little bit of a head and shoulders, and then right back down. Yeah, I mean, if it's trading below 78, it's probably going to keep playing around the $70 to $72 range, or where it's trading now, 75 to 70 bucks. If it drops it, then we're looking at 65 at the lower second. So basically, we're getting confirmation of everything we just talked about. If it starts to get back above 80 bucks, then you can see 85 at the upper first. So big area. If it starts to break that, that's this high over here. Then we're looking at 90 bucks by the upper second. So everything that I just said about the daily applies to the weekly, and the weekly confirms it. Weekly is pivoted at that 70.45. So only if that area is dropped are we looking for a possible test down to like 65, and maybe a little bit lower. We'll see. We'll see what this looks like on Friday. So you'll have to remind me. Yes, Sam. CryptoQuant is free for basic accounts. All the stuff that I shared with you, you can add to your dashboard. Let's go back to the DGen chart. Oh no. It's the M for market maker pattern. This was a true bear flag. Now if it retests 43 again, it's probably going to drop like a rock. No, it's fine for right now. All right, let me look. Okay, so yeah, Spin, just remind me if you want me to check on oil on Friday. Might be worth it. Sam's talking about you had Voyager stuff. Yeah, I have no idea. I know that they paid customers out, but like at a fraction of what the customer holdings were. You gotta investigate that one on your own. I don't really know much about it. I used them at one point, but I didn't have anything on there when they went under. Understood, Spin. Cool. Just remind me on Friday. We can always check up on it again. Yeah, Sam, I'm sorry to hear that about the Voyager stuff. It sucks. They had a lot of regular retail people who just were holding that were with them. I also used them for a while, but got out basically at the start of the bear market. I wasn't using them in any significant way. As I said, I prefer cold storage. There was they already paid out based on the lawsuit, Sam, as far as I know. You're gonna have to do some research on that, because I don't have any more information than you do regarding that. I know that they paid out and they basically shut down shop rather. Yeah, they just paid whatever fraction they had. And then, of course, FTX is going to be paying out cash to prior customers. I'm assuming that they might have some crypto left that they'll return, but it's likely going to be cash at the time, at the balance that it was during the closure. There are lawyers who deal with crypto stuff, but the cost in order to recover funds is probably going to outweigh the recovery of the funds in most cases. They're not cheap. And it really depends on how much you had in terms of dollar amount, you know, and then you can investigate to see if there is, you know, if it makes financial sense to try and recover a portion of that. And usually they will look over your case and let you know if there's anything you can do, but I don't know of any that, I haven't had to use any, thankfully. But, you know, at this point, it might be a little difficult to squeeze that orange again. Head and shoulders on Bitcoin. What time frame? Like an inverted head and shoulders? Maybe. If you wanted to make a case for this deviation being an inverted head and shoulders. Maybe if there's lower term time frame, no. If anything, it could be considered an inverted head and shoulders. If you're going to do patterns, but I don't play patterns. Yeah, I think the Voyager case is closed, as far as I know. Yeah. Open interest? Yeah, I mean, there's not too much different than what we were looking at before. If, like I said earlier, if Bitcoin puts in a higher low on the hourly, for instance, you'll see that there would be an OI divergence available to it. You know, you can use the trusty old trend line trick and roughly something like that, and then you can see that you know, relative to local, we'd have a bit of a bullish divergence on OI, but it's not playable until you see a low put in on the hourly, confirmed low on a close. Look, a lot of the times you're going to see patterns get what's called a throwback. So like an inverted head and shoulders, the risk on it is a throwback to the head and then a breakdown. In this case, for an inverse, same with the head and shoulders, throwback to the head and then a break up in that case, so a breakout. Yeah, it's just I don't play patterns. I play volatility because it's far more accurate in combination with trend. So this is a trend break on the daily. If you go to like the 12-hour, it's an inverted head and shoulders, but it's not really playable right now, especially with the position of volatility. The downside risk is a throwback all the way to the lower second at the head, right? So that's all the way down at 38,700 right now, and if Bitcoin were to start closing below the lower first, that'll be around the lows at 38.5 at the monthly. So I don't play patterns like that. If it breaks it's got a little bit of a swing low right now. If it breaks the swing high at 43,900, basically 44K, then we're looking to that upper second and for it to try to get continuation into the deeper 44 region towards 45 to 45.5 up here, right? 45, 44.5 to 45.5 area. And then, just reference the band levels on the daily. I'm not an advocate of pattern trading. I know that there is, because the hit rate is just so, the hit rate on pattern trades is very low. It's a lot lower than you might have read. And I suggest that you backtest the hit rate on patterns for yourself and see for yourself to make an informed decision for yourself based on what you're trading. Me personally, it's all about trend, support and resistance, volatility, and momentum. So I've repeated over and over and over again that is the 4 keys to trading, and you can't go wrong with it. And then it's just about what tools do you use to measure those 4 things, and then how do you define your criteria for your trades. Yeah, 4 would close currently back above 43,226 would turn momentum back up. But right now it's setting up for a bit of a range unless we see the downside lower second standard deviation at 41.8 at the weekly specifically dropped, then we're looking lower. Possibly retest of 40,500, 40K, maybe even the lows and lower. But for right now, it's just kind of hanging out. One of the things that I'll tell you about patterns is patterns don't care because it's about the bid and ask. So it's about the order books, and the order books rely on horizontal support and resistance because that's the price can only go linearly up or down, right, in relation to horizontal support and resistance. So if you find a trend line or you find a pattern that has confluence with horizontal support and resistance, that's where you need to pay attention. Big thing is just don't overcomplicate it. it's tough not to overcomplicate things, but especially because as price is moving, everybody gets bored and wants to draw on their charts. So, I mean, you're gonna see a trend line, right? And you'll put it down and you'll be like, oh yeah, so there's that trend line there. So if that trend line breaks, it's gonna go down to the next big what? Well, it's gonna go down to the next big horizontal support and resistance, right? But yeah, I mean, like, it's an upward channel, and like if it gets below it, it's going to retest it, and you know there's a longer term trend line it's rejecting from, and like it's okay, but it's more about horizontal support and resistance and where the trend line matches up with it. I mean, yeah, I mean, trend lines are absolutely valuable. They are called trend lines for a reason, because you're evaluating trend using them, but they are not the sole thing that you should be paying attention to. Yeah. Yep, trend, support, and resistance. That's literally the next thing, yeah. Volatility coming into those support and resistance areas, and that all creates momentum. Inflows and outflows, you're gonna check on, you can check on CryptoQuant, you can check on CoinGlass, you can check on Coinalyze. They all have the same data for inflows and outflows of coins. Yeah, well, I mean, like this, a trend line on the 30-second. Like, you know, you can pull that guy and you can say, okay, well, when this pattern breaks down, you're looking for a drawdown about the size of this particular area, and you can pull it whatever way you want. Doesn't really matter. You can do a straight line, you can do a line like this. It's not going to change it, because you're looking for like an equal move, right, from the break, and that's, you know, didn't get hit, but roughly the same area. You can pull it like that. I mean, you can say, okay, it's like this, more like this. That's fine too. And roughly get around the lows. That should be fairly close. Yeah, it hit the quote-unquote measured move. You can use fibs for it. You can do all kinds of stuff, but it doesn't, you know, then you can just draw trend lines all over your chart. Say, okay, well, there's this one here, right, for the local, and the bottom part here, you could say, okay, well, you could do this, and if it breaks down, but it's all just measuring. You're just still all going to be based on horizontal support and resistance and the way that order books operate. So, I mean, we already did a measured move on this anyway. What did I call it? Like 42? It matches up with the 4 hour or something. I don't remember now. You pull it again, I guess. But it was invalidated, so you got to go to the next big high. So 618. The one spot is 42.5. I forget what bands it was lining up with. Was it the hourly? I don't remember. Yeah, lower second. So based on that, this would be a 1272, which realistically would be a continuation of 1618 at 42. But 1272 is at the low $42,000 range. 618 is looking to get hit right now. It's nothing too crazy. That's only one part of this bigger move. I mean, you could pull this a million different ways. You could turn off bands and you could say, okay, instead of pulling, the breakdown of the move, you could pull from the top, right? And say, okay, well, there's that to, oops. You could say this guy here to the highs up there. You could see that it, stopped around the 1272, rejected at the one spot. It's moving through the 262 with the 2618 with the, roughly a target of the 42.5, which is what we talked about earlier. You could go even further back, right? You could take the bigger structure, you could take the hourly structure, for instance. Yeah, I wouldn't take this hourly structure. That's a little, the 15-minute structure, right? From the swing. To the swing low, to the swing high. And you can see that, it stopped around the 786, rejected the 618, moving through the one spot down to 42.5 at the 1272, which you can see there is support around there. Between there and the 1414, again around 42.450, 42.550. Below there, it's 42.3, this right around this spike low. There's a few different ways you can pull it. On the 30-minute, that same pattern's not there, right? So yeah, I mean, you could take the consolidation on this, like a 30-minute pattern, but I wouldn't use a fib extension. I'd use a regular fib. And then I take the low side to the highs up here. And then you can see it's, coming into a 1272. I already kind of swung the 1414 by the 618. Come all the way back to the 0.91. I mean, realistically, what you're really looking for is that high up there to this current low, right? And, 888's coming in at where? 42.5. So low there, you're looking at 1272 to the 1414, which is basically the weekly. See, this is also where we saw some higher low closes coming in relation to some higher term time frame supports at that 41,700 to 800 area. I'm sorry, this was a downtrending structure that then broke out right to the top side, but higher low as it relates to this short-term consolidation over here and these spikes. Yeah. That's a nice drawdown on the daily. This is all, look, this is all to be expected. I mean, this is likely going to put in a swing high. If it closes below 42, it's, a closing high as well, but, that's where we had the downtrend break. And the only way that you're looking for continuation after getting a downtrend break is if it goes back and breaks the most recent low. So in this case, that's this low down here on a close at 39,525 and the wick low at 35 or 38.5. Right. Otherwise, you're looking for compression somewhere around the lower first, and that's coming in at 40,006 to 800. Better if it holds the basis somewhere around 41.8. 41.8 to 42. Yep. Yeah. But you want to see compression. So it's either going to be compression that takes out the lower second, breaks the lows to get continuation and expansion. That's what you're looking for. If you're looking for further downside, and then breaking into this cluster of candles over here, which is, the weekly and monthly zone 35, 34,750 to all the way up to that weekly at 37,7, 38K. Yeah, right now, it recovered the weekly at 41.8, tested the weekly at 43.2 to 43.4 or 3, and then spiked and ran this high over here. Like I said, because it didn't close above it at 43.5 to 6, didn't get a close above it, then it's limited in terms of, it's got to pull back, find support. Basis coming in right there at the weekly at 41.8. So that's the preferred area to find support. It's where it found support on the last couple of dailies. But below there, lower first is in play to the lower second by the lows. Closing low coming in at 39.5, lower seconds right there. So if that breaks down, then the wick's available again. Run that weekly monthly zone again, 38.5. And then you take it, then it's expansion possible down to the next levels if those areas break. Same for the upside. Back above 44, then we're looking, local 44.5, 45 up here, and then 45.5 at the monthly to the next monthly at 47. Yeah, it's all very simple. So there's our 42.5 area, which we talked about earlier. So it's around the current low side. Above 43 currently, it's on the 15-minute, but that's going to update very shortly here. Now it is, nope, actually that number went up, so this is going to be continuation of testing the lows. So Stoke is at 43,034 due to this spike high right here into 43 to around 43.5, this lower high. So we have downtrend, right? We had the higher high, we had the uptrend, lower low, lower high, boom, back down to the lows. So probably low 42, 42.2, test 41.8. Probably in the cards here. We'll see if it pulls up short or not. And this is where you can put on volume and check volume as well. So it lost, this high volume area up here, lost this high volume wick low, and and then it's continuation to the lows. Got another high volume wick here, but it's already trading below it, so we're already getting that test down below it. Let's see if it holds. It's likely probably going to throw some bullish divergences, I suspect. It's in the area where it could throw some, at least throw some bullish divergence, hidden bullish divergence. But you really want to see in-trend bullish divergence, which means lower lows in this case, or equal lows. Yeah. Mm-hmm. Yep, trend. Then you look right to support and resistance. And then you measure volatility. Volatility expansion after breaking this support area, which was this support highs over here, which is where this swing low came in. Once it broke it, trend was already down. That's continuation of the downtrend plus expansion, and momentum went with it, obviously. So volatility expansion, so trend, lower high, lower low, volatility expansion through support in this case, so broken support, expand down with momentum following. So that's how you trade. It's really simple, actually. It's all about how you set up your trade, right? Like obviously on the 15-minute, this retest here that failed, that's the short. For me, I was filling based on my swing short, or my scalp short. I was filling based on the rejection of this resistance over here, which was a counter trend trade. But I was hedging against my long scalp from the lows, which was a counter trend trade from this side. So counter trend long, counter trend short. I don't suggest that you counter trend trade until you understand everything about your plan, your goals, what it is that you are looking for in your charts. You know, if it's a scalp versus which is an in and out trade, right? You're usually not longer than a day for scalping. Versus a swing trade. So I have, you know, a smaller swing trade from the lows at, you know, around the monthly at $38,500, $39,000. But that is, you know, I took profit against that swing at some of the resistances at the weeklies. And then in between that swing trade, which is a multi-day trade, then I scalp. So I've got, you know, I probably have like 16 trades open, but that's neither here nor there. It's across various assets and indices, as it were. Yeah, I mean, look at this tight consolidation to expansion down, and then, you know, it hit the lows, which was the highs over here, bounced off of it, reverse trend, and then expanded through this resistance, right? Tried to find support in the bottom side of this support range up here, and then fell through it. Once it fell through this consolidation again, then it's back to the lows. Hit around this low right here. It's run it now, and, you know, we'll see what happens from there. It's got to set a swing low and then set a closing low. Swing low would be set on any close above this current candle's high. And then from there, you look to the open here from the candle prior at around 42,740. Takes that out, then closing low is set. And then we start looking for, you know, there's an order block right here at 42.8 to around 43. You know, but generally speaking, it would have to get above the lower first in this case, wherever that is, to really start looking any further up into, you know, 43,150, 43.2, possibly 43.3 by the basis around this high. Right now, it's you know, has yet to even set a swing low. Yeah. Yeah, the bands, you don't need bands, but they are going to help you identify compression and expansion and mean reversion. So the bands are, you know, were fairly spread out and then went into a little bit of a compression to re-expansion. And then once they start compressing again, you're looking for mean reversion, and then you're looking for the next full compression to expansion. As it relates to trend and support and resistance, right? So that is the key. Is it's all in the context of trend and support and resistance, because expansion into resistance, it's got to recover that resistance and flip it to support to get continued expansion. Same for the downside. It's expanding into support, but it needs to continue through it to continue that expansion, thus continuing trend and a break of support, right? So it's all in context. Nope, sorry, my microphone cable was up against the microphone there for a moment. Yeah. Well, then you flip to a higher time frame. So what you're looking for is this was a swing in the upper second, upper third area. If it didn't pass the highs, you're not getting continuation, right? So even though it did close above the upper second, which increased volatility and volatility expansion of the bands, it didn't break the highs. So that's where you're looking at support and resistance, right? If it breaks the highs, then you're looking for expansion to continue. In this case, it's expansion of the bands is in play, with the possibility of coming down to the support area here, where you saw these highs come in, this low come in, down to that lower second. So it's got to now pass the lower second to get further expansion to the downside and break this low here. So the low is at 42,335. The lower second of the bands is 42,240, 250 area. So below there, and we're looking down to the next set of lows, right around this consolidation at 41.8 to 42K, which is the weekly. And of course this comes back to, this is that same area at 42 to 42,250 to 42.3 is the lower first on the 4 hour, which is in a bit of a transition phase. So likely to go into consolidation unless it drops that lower second at, again, the weekly 41.8. So it's more likely to go into consolidation if it doesn't drop that area. And we look for things to bounce around its current zone. But if it does drop that area, then we mark down to the next area, which is about 40,800 to 40,600 on the wicks. Possibly then the high side of this structure, where this low is coming in, this swing low at 40,000, $39,500 to $40,000, low $40,000 region. All in context of that daily. You can see how it all lines up. I mean, here's the easiest thing if you want to incorporate volume. This was a high volume wick low to a close, right? Right on an order block. So you just, mark it and say, okay, there's that wick low. There's that close on the bottom side of the order block. So it's got to recover that, to even have a chance of moving towards the lower first here, which is 42,950 on the 15 minute. 43K, somewhere around there. Yes, because of its volume profile. Also, that would set a swing low and a closing low. Well, technically it wouldn't, for the 15 minute it wouldn't set a closing low until it's back above like 43,150 or something, where the top of that candle could be a swing low set above 42.9 currently. Yeah. Otherwise, it's, you know, continuation test the lows here. You can go and find another high volume low side area. That's not it, although this was a high volume candle of interest right here, this doji. So you can consider that an order block. I know this is not the way that, you know, there's a lot of guys that don't do it this way, but you can consider that an order block. It's rejecting the top side of that order block area. You can extend it to the wicks if you like, because it is volume does encompass the whole candle. So you can see how that kind of lines up. It's kind of hanging onto the bottom side wick of that particular demand candle. This was also a liquidity area that was swung down below prior. So, and then you just go back further. You know, whereas the next big one was actually on the highs just below here, right? So between this high and this high. So, you know, roughly, this is not exactly, roughly around 42K. Go figure. That's the area that we were just talking about. And this was a higher volume high right there. And there you go, 42,300. And then you can compare those areas to how they line up with your bands. Oh, look, that's lower second on the hourly, which is not really lining up with the bands just yet on the 4 hour, maybe the 6 hour. Yeah, lower first on the 6 hour for 42K. And then you can go to like the daily, and it's in no man's land, so you're probably looking at 41.8. Yeah, if you're going to do order blocks, you're probably better off looking on the daily, but it just depends on what your goal is, what you're trying to accomplish by marking that particular order block, and how you interpret order blocks or demand zones. Yeah. Sorry, I was talking away from the microphone. Yeah, the lower first lines up with this wick low right here. Yep. This was just before the ETF launch, I believe. Yes, it was. It was the fake news day where the SEC had their account hacked. Came in right at 40,650, right where the lower first is. 650, 680 region. Yeah, you'll find confluences everywhere on your chart. Just a matter of how you are using them and in what context you're using them. Back to the DGN chart we go as I wrap this up. You all have a wonderful morning, afternoon, and evening. Watch that monthly close coming in today. Just as a reminder, that monthly close, the upper second is at 41,900 or so. So close above there today. Monthly closes above there. It will have closed above the upper second standard deviation. The reason why we bring this up is because we're looking for continuation of expansion of BBWP. That being this number down here, 26 over 25. We want to see that continue to get expansion, and we want to see expansion of the upper second and upper first standard deviation in a more aggressive manner as well. Yeah, my volume bars are kind of annoying, sorry. Yeah, that's pretty much it for today. You have a wonderful morning, afternoon, and evening, no matter where you are in the world. Please trade safe, and of course, as always, stay safe. I will leave the tunes on for a little bit here and set the stream to go off, and we'll say about 10, 13 minutes. We'll do 13 minutes, I guess. So we'll do 13:30. I do know that some of you like to review what we talked about and kind of go back through your charts and mark up your charts a little bit. So you're welcome to hang out and listen to some tunes while doing so. I will be back tomorrow with a staring at charts video. Take a look at the monthly during that video, and kind of what to expect or look for on the 2-month, as that will close at the end of February, coming into the quarterly that's going to be closing at the end of March. So we'll review a few of those things, and then we'll pick up where we left off today on Friday with another live stream. So you all, I want to thank for hanging out with me, as always, and take care of yourselves. Landy out.